Question number C 2.2.4. J Limited is considering three financial plan. The key information is as follows. Total investment to be raised 4 lakhs. Plan showing the financial proportion. So there are three plans X, Y and Z. X is 100% equity. Y is 50% equity, 50% debt. Z is 50% equity, 50% preferences. Cost of debt and cost of preference shares is given. Tax rate is given. Equity shares is having a face value of rupees 10 each. Will be issued at a premium of rupees 10 per share. So number of shares we can easily find out by dividing it with 100. Equity shares, expected EBIT is rupees 1 lakh. You are required to compute the following for each plan. Earning per share, financial break-even point, indifference point between the plans, and indicate if any of the plans dominate. Alright. So plan X, plan Y, plan Z, equity, debt, preferences. In this, 4 lakh will be equity shares, debt will be 0, preference shares will be 0. In Y, 2 lakh and 2 lakh debt. In Z, 2 lakh equity shares and 2 lakh preferences. Number of shares, as it is of rupees 20, will be 20,000. This will be 10,000. Here also number of shares will be 10,000. Tax rate is 50%. Let us put in the figures in our Excel sheet. We will be getting at least earning per share for all the three plans. Total capital required is 4 lakhs. In first plan, 4 lakh is equity. In second plan, 2 lakh is equity and 2 lakh is debt. And in third plan, 2 lakh is equity and 2 lakh is preferences. The cost of debt is 10%. Here also cost of debt, but here it is not required. Cost of preference shares is 10%. So preference dividend over here will be 20,000. How 20,000? 2 lakhs is preferences, 10% is nothing but preference dividend interest. Expected EBIT is 1 lakh. Tax rate is 50%. Here also I am having 50%. Number of equity shares, in first case 20,000. Second case 10,000. Third case also 10,000. The plan with highest debt will always dominate because R is 25% and KD is 10%. Even in preferences it is 10%. So risky plan will dominate. Most risky plan is nothing but situation number 2 or having highest amount of debt. And so it will dominate. It is very obvious. So we have got EPS, that is first answer for all three cases. In situation number 2.5, situation number 2, 4 and situation number 3, 3. Second, financial break-even point for each plan. What is financial break-even point? Plan X. Financial break-even point is equal to interest plus preference dividend upon 1 minus T. It is the EBIT level at which EPS is 0. In plan X, what is interest? 0. What is preference dividend? 0 upon 1 minus T. Answer will be rupees 0. So if EBIT is 0, then only EPS will be 0. As far as plan Y is concerned, interest is the 20,000. Preference dividend is 0. So my financial break-even point will be rupees 20,000. In Z, interest is 0. Preference dividend is 20,000. Upon 1 minus T is 1 minus 0.5, which is 0.5, which will be 40,000. So in plan 1, if EBIT is 0, then only EPS will be 0. As I am having Excel sheet, I can verify it. No need to verify this in examination. So if in plan 1 I take 0, then only my EPS will be 0. In plan 2, if I take EBIT 20,000, then only my answer of EPS will be 0. And in plan Z, third plan, if I take EBIT as 40,000, then only my EPS will be 0. So I can easily verify financial break-even point. I can go to third question, which is indifference point between the plans. Now, if there are two plans, you can always find out one indifference point. Here, there are three plans. So you will have to find out indifference point between XY, YZ and XZ. So now there will be three answers: XY, YZ and XZ. Let me find out indifference point for between X and Y. What is EPS of X? What is indifference point? It is level of EBIT at which EPS is the same in both the plans, that is X and Y. What is EPS of X plan? Say X is EBIT. Of both the plan minus interest. What is interest in plan number 1? 0. Into 1 minus T, I will be getting after tax, minus preference dividend, which is 0. This is earnings available to equity shareholders divided by number of shares. Number of shares are 20,000. This is nothing but EPS of plan X. What will be EPS of plan Y? X minus, what is interest? 20,000 into 1 minus T is 0.50 minus 0 upon 10,000. This is EPS of plan Y. This is EPS of plan X. I want to find out answer of X, that is EBIT at which EPS is same. So I am equalizing both the equations. This will be 0.5 X divided by 20,000. This will be 0.5 X minus 10,000 divided by 10,000. This is 2. This is 0.5x, 2 going on this side. This is 1x or 1 minus 20,000. This is 20,000 is equal to 0.5x. X is equal to 40,000 rupees. What we have taken as X, it is EBIT at which EPS is the same in plan X and Y. Let me verify whether my answer is correct or not. In X plan, I am taking EBIT as 40,000 and in Y also I am taking 40,000. What is EPS? Answer of EPS is 1 and 1. So my answer is correct. Level of EBIT at which EPS is same. Of course, you cannot verify this in examination because you will not be available with Excel. Let me find out indifference point between Y and Z. What is EPS of Y? I already know. It is X minus 20,000 into 0.5 divided by 10,000. What will be EPS of Z? X minus 0, because interest is 0, into 0.50, 1 minus T, minus preference dividend, which is 20,000, upon 10,000. 10,000 will get cancelled. This is 0.5x minus 10,000. This is 0.5x minus 20,000. This is also positive. This is also positive. So 0.5x minus 0.5x is equal to minus 20,000 plus 10,000, which is not correct because this is 0. 0 should be is equal to 0. What does this mean? There is no indifference point between Y and Z. So you put in any EBIT, the answer of Y and Z will never be same. Let us try out third, X and Z. What is EBIT of X? It is X minus 0, that is 0.5x divided by 20,000. This is EPS of X if X is nothing but EBIT. What is EPS of Z is this 0.5x minus 20,000 divided by 10,000. This will be 2. It is 0.5x is equal to 1x minus 40,000. This will be 0.5x is equal to 40,000. X is equal to rupees 80,000. What is X? It is EBIT at which EPS in plan X and Z will be same. Let us find out. I am taking EBIT as 80,000 in both the plans. X and Z. See the EPS 2 and 2. So my answer is correct. This is indifference point between X and Z. So we have solved all three questions. First was to find out EPS. Second was to find out level of EBIT at which EPS is 0 in all three plans. We have found out financial break-even point. And in third question, we had to find out indifference point. But as there are three plans, we found out combination of plans for indifference point, and we understood in this there is no indifference point. There is no level of EBIT at which EPS will be same in plan Y and plan Z.